few options for your YouTube video intro, catering to a friendly, engaging, and not over-the-top tone. Option 1, direct and energetic. Hey Forex fam! Welcome back to Forex Scope, your go-to for sharp Forex analysis and actionable trading insights. Today, we're diving deep into the GBPJPY, bringing you the latest on the 15-minute and 1-minute charts to help you navigate those intraday moves. If you're looking for clarity on where this pair is headed, you're in the right place. Don't forget to hit that subscribe button and ring the notification bell so you don't miss out on our future calls. Option 2, calm and analytical. Hello everyone, and welcome to Forex Scope. I'm excited to bring you today's analysis, focusing on the intriguing GBPJPY. We'll be examining both the 15-minute and 1-minute timeframes to uncover potential trading opportunities and future price direction. If you're a trader who values well-researched insights, make sure you're subscribed to Forex Scope and join our growing community. Let's get started. Option 3, slightly more casual and benefit-oriented. What's up, traders? It's your host from Forex Scope, back with another essential analysis. Today, we're zeroing in on GBPJPY, and trust me, you'll want to see what we've uncovered on the 15-minute and 1-minute charts. We're talking about spotting those immediate moves and understanding the near-term sentiment. If you want to stay ahead of the curve, smash that subscribe button and join the Forex Scope family. Option 4, short and sweet. Welcome to Forex Scope. In today's video, we're dissecting the GBPJPY, looking at the 15-minute and 1-minute charts for your trading advantage. Ready to see what the charts are telling us? If so, hit that subscribe button and let's get into it. This support zone is identified between the price range of 200.732 and 200.836, spanning from the timestamp 176.251.5900 to 176.251.9500. During this period, the highest price reached was 200.965, and the lowest dipped to 200.648. This area shows significant price action characteristics that make it a strong support. We observe multiple instances where the price interacted with this zone, indicating potential buying interest. Specifically, the price tested this level, found buyers stepping in, and bounced back up, suggesting that this price range is a significant floor. The presence of several candles with substantial lower wicks within this zone further confirms the buying pressure at these levels. Furthermore, the price action shows a period of consolidation or indecision around this price band, with prices moving sideways for a brief period before a subsequent upward movement, reinforcing its role as a demand area. The lower boundary of this support zone is clearly defined by a low of 200.648, and the upper boundary is marked by a high of 200.965 during the observed period, highlighting the tested price levels where buyers have historically stepped in to prevent further decline. The multiple touches and consolidation within this narrow price band indicate strong buyer commitment at these levels, making it a reliable support area to consider for its potential to halt downward price movements. This resistance zone is identified between the price range of 201.474 and 201.604, spanning from the timestamp 176.252.5800 to 176.252.6700. During this period, the highest price reached was 201.604, and the lowest dipped to 201.124. This area exhibits strong characteristics of a significant resistance level. We observed a notable surge in price that approached this range, only to be met with selling pressure that pushed the price back down. This pattern of price reaching a certain ceiling and then reversing indicates a concentration of sellers or a lack of buying conviction at these higher levels. The presence of candles with substantial upper wicks within this zone further supports the idea of active selling pressure at these price points. The price action shows a brief push higher but ultimately fails to sustain above this band, leading to a subsequent decline. The upper boundary of this resistance zone is clearly defined by a high of 201.604, and the lower boundary is marked by a low of 201.124 during the observed period, highlighting the tested price levels where sellers have historically stepped in to cap upward movements. The repeated attempts to break through this resistance and the subsequent rejections suggest that this price range is a key area where sellers are actively defending their positions, making it a reliable resistance zone to consider for its potential to halt upward price movements and lead to price reversals. The support zone is identified between 201.861 and 201.889, spanning from timestamp 176.253.8340 to 176.253.8700. This area shows multiple instances where the price tested these levels and showed a reaction, indicating potential buying interest. Specifically, the price encountered resistance around the 201.640 level during its ascent, causing it to pull back to this lower band. Later, as the price declined, it found a temporary floor in this vicinity, with several candles bouncing off or closely approaching the 201.861 mark. The presence of significant wick reactions in periods of consolidation suggests that traders were actively defending this price range. The accumulation of price action within this defined range highlights its importance as a historical area of value where buyers stepped in to counter selling pressure, creating a stable foundation for potential upward movements. This confluence of reactions reinforces its credibility as a robust support level. The key timestamps capture a period where the price tested this level multiple times, exhibiting indecision before a subsequent move. The long lower wicks on some of these candles are particularly indicative of buying pressure overcoming selling pressure at these specific price points, solidifying its role as a support. The resistance zone is established between 201.916 and 201.963, encompassing the period from timestamp 176-254-6740 to 176-254-7400. This region represents a significant area where the price has previously struggled to break through, indicating a strong presence of sellers. During the observed timeframe, the price made several attempts to move higher but was consistently met with selling pressure, causing it to retreat. The upper Bollinger Band also played a role in defining this resistance, as price often reacted to its proximity. The presence of numerous candles with long upper wicks, coupled with periods of price consolidation within this zone, points to a strong supply zone where sellers are actively defending their positions. These price actions suggest that for the price to move decisively higher, a substantial increase in buying momentum would be required to overcome the entrenched selling pressure in this range. The multiple touchbacks within this narrow price band demonstrate a clear battle between buyers and sellers, with sellers currently holding the upper hand. The timestamps capture a period of heightened trading activity where the price repeatedly tested the upper limits of this zone, confirming its significance as a resistance level that has historically capped upward movements. The formation of bearish candles with substantial upper shadows as the price approached this zone further reinforces its role as a barrier to further ascent. The GBP-JPY pair is showing signs of a potential upward movement following a period of consolidation. The current price of 201.894 is nearing a short-term resistance at 201.916, but the presence of strong buying volume and the upward trajectory of the Bollinger Bands suggests that a breakout is likely. The Fibonacci retracement levels also indicate potential support around 201.889, which is currently acting as a floor. As the price breaks above 201.916, it is expected to target the resistance zone between 201.916 and 201.963. A successful breach of this zone would open the door for further upside towards 202.000 and potentially 202.050, aligning with the broader uptrend observed in the past few candles. The tick volume also shows an increase in trading activity, supporting the bullish sentiment. The trendline analysis also supports a potential upward continuation. Traders should watch for a confirmed break above 201.963 to confirm the bullish momentum and target higher levels. The interplay between the price action, volume, and technical indicators paints a cautiously optimistic picture for a continued upward trend in the near term. This analysis assumes the market will continue to exhibit bullish characteristics, with the price finding buyers at each pullback and pushing towards new highs, driven by the momentum established. The identification of support and resistance levels, along with Fibonacci extensions, provides clear targets and invalidation points for this bullish outlook.